Good morning. Market Day Report is on the air. We're working our way towards the weekend. That was an 80s song, wasn't it? Group called Loverboy, working for the weekend. Everybody's working for the weekend. Well, if the weekend means maybe higher grain prices for you, maybe that's a good thing. Where are we right now? Let's go to the corn market. And corn is higher in the overnight session. Now, we saw this yesterday as well. Overnight session where we saw a little bit of strength in the row crops, but then gave it up during the day session. December overnight, 426.5. That was 5.5 higher. Soybean, and again, we're looking at higher prices from the overnight session. 1019, that was 2.5 higher. Let's hit on soy meal and soy oil. Soy meal, lower overnight. Soy oil now to 52 cents on every one of those contracts. By the way, flash sale to Mexico of soybeans. More on that in a moment. Wheat market was higher overnight, up 4 3/4, 525 3/4. Kansas City up 3 3/4 at 522. Spring wheat 8 higher, 653. Top end of that nearly dime range. And December cotton, 44 higher, 69.24. It's been a while since we've talked 69-cent cotton. It's only been 24 hours, though, since we've talked to Brian Hoops, President, Midwest Market Solutions. So, Brian, couple of things. Can we build on the momentum from the overnight action? And number two, a flash sale again. Can that help the market?
Well, I don't know if it's going to help us out that much, Tony, but it was 4.4 million bushels of soybeans sold to Mexico this morning. So it's not going to hurt us any. It's going to help us. We've seen a little bit of short covering overnight. It was announced yesterday by Commerce Secretary Lutner that there's a trade agreement with China. It didn't include any provisions with ag products. It's all earth minerals, and it was very vague as far as terms. So the trade is hoping that this is opening the door, at least, for the U.S. and China have trade agreement that would include grain and agricultural products. So far, there's been no indication, and I assume, since it wasn't trumpeted throughout the news media how great this deal was, that there wasn't anything to be included. So that's kind of a wait and see number here. But we're going into the weekend. We're going into Monday's report. No doubt that's going to be a volatile report. So a little short covering is probably warranted after we've really taken prices sharply lower since last Friday's reversals. Soybeans have lost, over 50 cents. Same with wheat. Corn down 25 cents. It's warranted to have a little bit of a bounce in here. I think the spring wheat may be the upside leader here because Stats Canada was out earlier this morning with their production or acreage numbers, and those were less than expected. So all acres planted in Canada, all acres 18.8 million, down below estimates of 19.2, and in March they were at 19.4. So look for spring wheat kind of be the upside leader here as we go into today. And then also by the end of the session, its delivery period begins at the close today. So July contracts can be delivered upon. And if you're holding long July positions, please get out of those.
Okay. And you mentioned the flash sale, 4.4 million bushels to Mexico. That's on the heels of 110,000 metric tons. I didn't have the time to break out to bushels to Egypt yesterday. And let's throw in the dollar index real quick. The U.S. dollar has hit a 3-year low, and again, continuing to fall this morning at 96.75. Will that open the door with lower prices and a cheaper dollar for more sales? We'll pick up the conversation on the other side of this break with Brian Hoops. Market Day Report continues in a moment. Well, we could probably spend the next 10 to 20 minutes talking about the livestock market. There's a lot happening in the row crop side, but cash cattle this week selling 224, 225 in the south, north 230 to 232. How will that impact what's happening with live cattle? Well, here's where we'll start the morning. Nickel lower on the June at 221.55. We open that market in less than 10 minutes. August 32 higher at 209.30. Yesterday, the feeder market settled the day in higher territory. August 303.17 up 87, and the September at 303.30 was 70 higher. In front of a hogs and pigs report, we settled the hog market in the red. August 110.27 down 95. Let's bring back in Brian Hoops, President, Midwest Market Solutions. I'm looking through the quarterly hogs and pigs report, slightly higher according to USDA.
Yeah, about 500,000 head more supplies than what the trade had thought or going into the report. So could be a little bit of a bearish pullback in here. We did trade lower earlier this week and again yesterday. So maybe some of that has been muted. And, the hog market doesn't really trade off of fundamentals anyway, but cutouts were down sharply yesterday. So there's a reason here to see the hog market pull back. It just may be overvalued relative to the amount of inventory that we have, just maybe too much supply right now. So look for that market to ease back, at least on the opening in here, and see if there's any buying interest that comes in and bargain hunting after a lower opening. The cattle market has some cash cattle trade to discuss. It's kind of light trade in the southern plains. We're in that 224 to 225 range. Remember yesterday the bids were 222, asking price is 28, so they kind of split the difference and met in the middle, but it still leaves June at a couple dollar discount, which should try and narrow that spread. Meanwhile, northern trade was much stronger, up around 230. That's still down from last week, another $4 to $5 from the prior week, but it is a much stronger trade than what we saw in the south. We just really haven't seen any dress trade yet. Bids and asking prices seem to be very far apart, 360 to 376.
And we're also hearing some rumblings about some issues dealing with packing plants in the Texas Panhandle. So if we slow down any of this, we could have a game changing in front of us here in the fourth quarter.
Yeah, we've heard a lot of talks about plants closing down, and a lot of them have not been very profitable. So it makes sense they would at least close down for some maintenance or take some time off. Of course, next week with the 4th of July holiday, a lot of plants will be closed. We'll have a much smaller kill week, which should again help packer margins improve. They're up to over $50 a head in the black now. So those things, those margins improved a great deal as our boxes continue to be strong in here, indicating decent demand.
Yeah, spot on. Brian, thanks for coming by. We'll see you back here early next week. Brian Hoops is president of Midwest Market Solutions. Do you realize 1 week from today what you'll be doing?
I do know what I'll be doing.
Waving the flag,
Yes.
grilling, and enjoying Independence Day.
Happy Independence Day. I can't believe it. Is it 2026 that we celebrate 250 years?